Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about a very interesting consumer company that is known as Mark Electronics, which has been falling relentlessly for the past 2.5 years. Let's understand what has hit the company and whether you should invest in it or stay with it or not. So, let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Now, about Merck Electronics. It was established in 1981 and they provide consumer electronic products. And their major brand has been Onida. Now, if you remember in those days, probably 20-25 years back, Onida was a top brand in televisions, and that is CRT televisions. And people used to envy those who owned Onida because it was one of the most expensive televisions to own. There were other brands like Panasonic, Philips, etc., that were Celtron, and so on and so forth. That were available, and people went for that because of it being more economical, they being more economical. But people used to think that how they could even buy an Onida television. Those were the days of Doordarshan, and those were the days of the 90s, the early 90s, that I'm talking about. Onida as a brand has absolutely dwindled down to nothing, and although they are now producing other kind of products or chips for computer components, etc. But still, at the moment, they are into selling LED TVs, washing machines, and microwaves. So, Mark Electronic do sell microwaves, but if you remember, I have put up many videos about AC companies as well as conglomerate companies like Whirlpool. Then there are other firms which are making very good microwaves and washing machines, and currently selling all across India and abroad. So the business of Merck Electronics has absolutely shattered over the last 8-10 years, and that has led to the stock downfall or the diminishing returns from the stock that has taken place. And the stock is now trading in single digit, not even in double digits. If you look at the financial, that shows the true picture. I put up a video on the same company, that's Merck Electronics, a year back, and I'm reviewing it again after a year. So, first half FY20 versus the first half of FY19, you have a sales figure that is down 11.5%, whereas other consumer companies are putting up a robust sales figures, especially the white goods companies. You have a PAT figure in which the PAT has been even worse. So a loss of 3.5 crores has become a loss of 7 crores. So the loss is just going down further in a very accelerated manner. It has doubled from the last 6 months review that I had. The debt has increased by around 40%. So the debt that was at that point of time, probably a year back, was around 45-47 crores, has gone up to around 67-68 crores. That has really, I think, 65 crores. So that has also gone up by around 40-45%. There's no way you can find out a return on equity or net profit margin because there is no profit that is coming in Merck Electronics, and that is the bone of contention for everyone. Even if the sales would have fallen and there would have been some sort of profits coming in to the market from the company, the stock would not have fallen the way it has been. If you look at the performance of the stock, then the stock has been falling relentlessly since December 2017. So, in December 2017, when we had that bull run in the small cap index, we saw the stock went up from around 10-12 rupees all the way to 64 rupees. That was the high. So, around 64-65 rupees was the peak made by Merck Electronics in mid December 2017. And since then, in the last probably just over 2 years, the stock has gone from 64 rupees all the way to 9 rupees now. and it seems like there will be no stopping at these levels as well, because of the kind of numbers that it is producing. What the numbers are showing with the accelerating debt as well as dwindling sales and loss getting accentuated, what all these things show is that the company is in turmoil. The company might just sink to probably unlisting, or could become unlisted in a few weeks or few months or years time, and hence it is a complete avoid for me. It has lost around 85% of its value, and the market cap, which was 500 crores about a year back when I first made the video, is now, it has dwindled down to 200 crores, and the numbers have been deteriorating fast, and this is kind of scary for those who are invested into the company and are losing 30, 40, 50%. uh, it has gone into losses from December 18. So actually, before going into losses, people started selling the company, so they had an understanding of where the company is headed. And that's why I believe that you need to look at technicals as well as fundamentals while looking at any stock. So if the stock is relentlessly falling even when good results are coming, there could be something fishy happening. And so that was the case, that before the December 18 numbers, when the company came into losses for the first time, the stock had already fallen around 45-50%. So the stock is down around 85% from the peak, and currently like it is like any other, you could say, penny stock that is trading in the market, although it is from the consumer domain. So major reasons for the fall: Oneida no longer an enviable brand as it used to be in the 90s, as I explained. There's extreme competition in the consumer electronics business. So you look at other companies like Whirlpool, IFB, there's Havels, which have gone into consumer electronics. There's VGuard, which has gone into from stabilizers to consumer electronics. There are other companies, Orient, which has gone into it. Before it was just a pure paper company. And then there's Xiaomi, which has come into, say, televisions, LED, and just changed the whole dynamics of the market, coming in with the 12,000 rupees, 15,000 rupee LED televisions that they manufacture and selling big time. So things have really changed from those markets of Oneida and CRT television, and probably this brand and this company could not match with the changes that took place over the last 20-25 years and have lagged behind. And that is why, from a leader, it has become a total laggard and probably uh, going to extend altogether. India right now are demanding more quality at reasonable price, so they don't want a third tier, fourth tier television, LED, or a washing machine just because it is cheap. They want something which is durable. They want something which is sleeky, which is nice, but also at reasonable price. And that is why I'm saying there's heavy competition and there is a churn going on with respect to pricing, with respect to what kind of advertising these companies do. It is no longer a space where big companies like Sony and Samsung just rule the roost. So when Sony and Samsung cannot hold on to their positions in the LED markets, then how come you will expect Oneida or Merck to do that? So people look for market leaders in terms of stocks. They look for market leaders even if they are expensive. So that's why expensive stocks are becoming more expensive. And there's forecast for further damage for the company as the competition increases. The company might lose all of the 1 or 1.5% or 0.5% market share that they currently own. So what needs to be done? Probably you need to avoid at all cost and buy only top companies in its segment and have a 5 year view. Do an SIP into such companies which are the market leaders in its space and have less than 5% portfolio or exposure. So this was my video on Merck Electronics. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.